do appreciate him taking the time to join us. Like I said, we'll get this show on the road. Any questions come up, feel free to use the question feature. Otherwise, I'm going to get quiet here and let Jason take over. And thank you again for taking the time to join us.
All right. Thank you, Dave, for the hour or so to go through Mutual of Omaha's Medicare Supplement product line today. So welcome, everyone. Thanks for your attention today. My name is Jason Weber. I'm one of the brokerage health sales directors. You can see that on the slide there, and I support the Medicare Supplement product. I work out of the home office in Omaha, Nebraska, so hopefully I'll have an opportunity to see a lot of you guys on our incentive trips. We're going to talk about a little about that today and what Mutual has to offer above and beyond just the product itself. But just realizing that we may have some folks on the call today that does not have specific experience with Medicare Supplement, I just want to, really take the time to set some context for our topic of discussion today, which is Medicare Supplement. So I thought I'd talk about an overview of the Medicare program. This is a social insurance program that was established in 1965 to provide health care to seniors that are retiring. A lot of people, that is provided to them today as part of a group plan through their employer, but once they do, if they're not a part of a retiree program, they're going to have to look for their health care offered through another system. Medicare is one of those, and I'm proud to say that Mutual of Omaha has actually been in this space since the beginning. Since Medicare supplements were first offered in 1966, we've been one of the key players in that arena. We're very proud about that. We're going to go through and talk about our brand, with consumers that you're meeting with, you're talking to on the phone. That brand recognition is so important, and Mutual of Omaha with the Wild Kingdom and everything else is definitely a household name, and we're very proud of that. Medicare provides health coverage to almost 49.4 million people, and you can see here that the program is really designed for people that once they hit that retirement age at 65, they can apply for coverage, and we'll get into the opportunities they have to enroll. There's an open enrollment period where they can skip through the health underwriting questions on the application, so regardless of what health condition they're in at the time of application, they can get the coverage when they need it. We'll get into a lot of those details, but of course, that is our target market for this product. That should be your target market for it as well. We're really excited to bring on healthy individuals. That obviously has an impact on the claims performance of the product, which is going to affect the annual rate adjustments that come out every year. We're going to get into all those details today, but suffice it to say, MedSups are for other people beyond just those that turn age 65. If they have certain disabilities before they turn that age, they could purchase a Medicare supplement for that purpose. And then if anyone was diagnosed with end-stage renal disease, if they've had kidney failure or a kidney transplant, they can apply for a MedSup for that as well, and we'll get into some of those details today. But what I really wanted to do to start off today is talk about the huge opportunity that this market has for you. The senior market is ripe with opportunity. You can see here, the people that are, ripe prospects for you is huge, and that is only growing. I think we all have heard the stat that 10,000 baby boomers are turning age 65 every single day, and that's going to continue through year 2030, as you can see here on this slide. And it's not just Medicare supplement that you can be talking to these individuals about. That's really, I like to think about it as a door opener opportunity, especially when we talk about how, once you turn age 65, you have that open enrollment period. That's really that door opener product. It's easy to get it into their hands. It really doesn't matter what health they're in at that point. But as we do more fact-finding with those people, what are some other solutions that they have a need for? Mutual of Omaha has a great long-term care product. I know AIM is doing a lot of work with you in that arena, and those are people that, the next 10, 15 years, maybe even before then, they're going to have a real need for long-term care coverage, and those services are very, very expensive. So that's a great product to talk about. supplementing that Medicare supplement conversation, and then other products as well. There's, single premium immediate annuities for retirement income. We're talking about children's whole life, which Mutual of Omaha offers as well. So don't let the conversation end at MedSup. This is a huge market for you to talk to, and there really is, a lot of sales opportunities on the table once you start that conversation. But back to Medicare real quick. When someone turns age 65, they really have two choices in front of them if they're looking at health care coverage offered through the Medicare program. They can either go with original Medicare, which is where we're going to focus our attention today, because if you look at the bottom of this slide, that's where the MedSup is going to come into play. Original Medicare is going to include both Parts A and Part B. We'll dive into this a little bit more, not too much, but again, just to add some context for our call today, Part A is the hospital insurance, and then Part B is medical insurance, and that doesn't cover all of the costs. There are some co-insurance deductibles, co-pays, doesn't cover specific things like blood and a lot of that. That's where the MedSup is going to come into play as a solution. That is for individuals that are purchasing original Medicare or enrolling in original Medicare is what I should say. The other option they have available to them is a Med Advantage plan. Mutual of Omaha does not offer a Med Advantage plan. That's definitely a great product for a specific prospect. We're not going to talk about that today, of course, but enrollees in a Med Advantage plan can get their coverage dropped at any point in time. There's a lot of positives and negatives to that, but again, we're going to focus on the left-hand side. So what does Medicare coverage include? I mentioned it already. There's Part A, which is hospital insurance, and Part B, which is medical insurance. So think about Part A as the location that the care is being received, a lot of the costs that are associated with that, and then Part B is the care that's received by the doctor themselves. Okay, so Part A, once again, that's hospital insurance. So if you're going to a hospital, going to an emergency room, getting an annual checkup in a hospital, something like that, that would also include nursing home care and hospice care. On the point of nursing home care, since I mentioned long-term care just a couple slides ago, we don't want people to think that MedSup is going to work in lieu of a long-term care insurance policy. A lot of people want to think that just because it's so much cheaper, and long-term care can be cost prohibitive in a lot of circumstances. While Part A does include nursing home care, again with original Medicare, not the MedSup, but original Medicare, that's only after a stay in a hospital. And if we look at a lot of people that are claiming on a long-term care policy, they're not first going to a hospital. Their health is deteriorating over a longer course of time. It's not like a horrific car accident or a pretty substantial health event. It's just they're getting older. They can't perform a lot of their daily activities like getting out of bed, making meals, things like that on their own. They do require a nursing home at some point, but if they haven't been in a hospital first, then Medicare is not going to provide that coverage to them. So again, these senior clients, they're a great market to talk to about long-term care insurance as well. And then with Medicare Part B, that's the medical insurance. So any services that are provided by a doctor, outpatient care, if they need durable medical equipment, say they suffered a stroke and they can't walk on their own very well anymore. Maybe they need a wheelchair ramp installed in their home. That would be provided through Part B, which is the medical insurance. And then also preventative services like that, annual health checkup, things like that, that would fall into Part B. So let's talk about MedSup. Okay, we talked about what Part A and Part B cover. Like I said, there are some gaps in that coverage. For example, there is a deductible that you have to pay for Part A. It's over $1,000 this year, and that only is increasing as the years go on. So MedSup is definitely easy to be positioned to these clients because, once again, Medicare does not cover all of those costs. And if they are turning 65, that's a great market because they can skip out of that health underwriting once they turn 65. There's a 6-month window to do that. So Medicare supplement, it's also known as a Medigap policy. So if you've heard that term, those are one and the same thing. Help pays some of the health care costs that original Medicare doesn't cover, like a few that I talked about already. They're sold by private insurance companies. So if one company offers a Plan F, say you want to purchase a Plan F through Mutual of Omaha, but your client is also shopping around and they're taking a look at Aetna or United Healthcare, another competitor of ours, that Plan F is going to be exactly the same. The only thing that is going to differentiate our product through another competitor is the rate that we charge. There's some different value-added programs like maybe a value-add program that's going to cover vision costs or something like that. Those are the things that are differentiating our product from another carrier's. It's the price. Maybe there's a different household discount. I'll talk about our new 12% household discount a little bit later on. Those are the things that are going to differentiate the product from one to the next, and those are the things that we need to make sure we're explaining to our clients, just to make sure they're getting the best product that they have available to them. Once again, they're sold by private insurance companies, so while Medicare is offered through the government, MedSups are not. They're offered through private insurance companies like Mutual of Omaha. Every policy must follow federal and state law and are standardized so individuals can compare easily. So once again, they are the same. It's just the price and a lot of those value-added programs that are different. Also, each carrier is going to offer different plans in each state. They don't offer the same plans in all states in which they conduct business. So for example, in Nebraska, we have Plans A. All states are going to offer Plan A. But then it's going to be different beyond that. We really have our niche in Plan G. We're going to talk about that a little bit later on as well. But we offer Plan A, Plan F, and Plan G in the state of Nebraska. So we just want to make sure we're explaining all of the different plans that you are able to sell to that person depending upon who you're contracted with on a carrier level, and then what plans those carriers have available in your client's state. And that's really where the conversation starts. Once again, all plans offer the same basic benefits. Some offer additional benefits. For example, Plan F is going to cover the Part B deductible, whereas Plan G will not. So it really depends on what our client's looking for, their budget, and really how they plan to use that policy on a going forward basis. Plans E, H, I, and J are no longer available to buy. That's not just through Mutual of Omaha, but that's through any carrier that's going to offer a MedSup. Those plans have been stricken from the record, so to speak. But if your client already has one, they can definitely keep it as long as they pay those premiums. All MedSup policies are guaranteed renewable, which we'll get into on this slide, actually. So we'll talk about that real quick here. Just moving on the MedSup. Costs may vary by insurance carrier where an individual lives, so we'll show you some of the national maps we have. The competitiveness of our product is not going to be the same across the board. It really depends on the claims performance in individual zip codes and our block in any one state. Okay, if we have very good claims performance, obviously that's going to impact the rate adjustment that we institute in successive years. And if we don't have rate increases that year, or maybe a very minimal one, maybe that allows you to become more competitive with our product versus another offered by another carrier. So a lot of those are going to play into that competitive positioning. MedSup obviously can only cover one individual. If you're talking to a husband and wife couple, you can, using our e-app or with a paper application, they can apply together, but again, they're individual policies, and each application is going to only cover one of those individuals. All plans are guaranteed renewable. What does that mean? So guaranteed renewable states that we can't raise rates for any one individual. If we do, that is going to be impacted on the entire block of business in any one state. Also, as long as your client continues to pay their premiums, we can't drop them for coverage. So if they have really poor claims submissions to us, it's costing us a lot of money, that specific policy is no longer profitable to our company, well, we can't cancel that policy just because of that specific scenario. Okay, so again, as long as your client continues to pay their premiums, their policy will be renewed each anniversary date. You can see any provider that accepts Medicare, so you is our client at this point. So when we're talking about the circumstance in which they're able to utilize their MedSup policy, any healthcare provider that accepts Medicare is going to be able to accept the Medicare supplement as well. They don't need referrals, so relative to other healthcare programs where you need to see a specialist and you can only see that specialist after seeing a general physician first and they grant you a referral, then you're able to do that. You don't have to do that with a MedSup. You can see the specialist right away. So that's a great added value as well. When a healthcare professional accepts Medicare assignment, that's what we're talking about when we say they accept Medicare in that first bullet. They're agreeing to be paid directly by Medicare to accept the payment amount Medicare approves and not to bill you for more than the Medicare deductible and the co-insurance, okay? You do not need to be certified through CMS and or carrier to sell a Medicare supplement. So now the you is you, the producer. So if you're looking to get into this space for the first time, you're wondering, you know, what do I need to do to get started? You don't need a specific license. You don't need a specific certification. As long as you have your health license, you can sell Medicare supplements to your clients, and you're contracted with a carrier that offers that product line. Going forward here, you can take a look at all Medicare supplement plans. Again, all carriers are going to offer Plan A, and then it's going to be specific to the carrier on other plans that are offered. Excuse me, one second. Okay. So you can see again, you know, a lot of carriers are going to offer that Plan F and Plan G, and we'll talk about that a little bit later. But again, all carriers are going to offer that Plan A, and then it's going to be specific to carrier and state on the other plans that they offer. A little bit more on the pricing. So what goes into the price that's going to dictate the competitive position for one carrier, or maybe you, the producer, you have a specific piece of leverage that you can offer to your client? Well, pricing elements are going to include the gender rating, whether they are a smoker or not, area rating, which is the price that we offer, and the claims performance, and that's specific to a zip code within a state. Different discounts that we offer, again, like a household discount, and we have a new one that we're rolling out this year. It changes the definition, really how a client is going to be eligible to receive that. We're going to talk about that a little bit later on today. And then the underwriting risk. Rate adjustments help keep pace with rising Medicare claim trends and changes in annual deductibles and copays. So really that's kind of on the forefront of a lot of people's minds when they're looking at MedSup.
Hey, Jason, this is Dave.
Yes.
Quick question came up. I've heard talk off and on as far as some carriers offering what they call group MedSup.
Mm-hmm.
Have you heard that concept before yourself?
I have, and that's actually a space that we're starting to get into. That's a retiree exchange product. It's actually different than the MedSup that an individual would be able to purchase through Mutual of Omaha, even if it's in the same state as that retiree exchange plan. But we're starting to see a lot of employers, you know, just to maybe tighten the book a little bit. They don't want to continue to offer their retirees that same healthcare group plan. Well, they can partner with an insurance carrier and offer coverage via a Medicare supplement, and that would only be available to retirees of that specific company. I'll tell you, we're actually in talks to offer one to AT&T employees, and then there's some others that we're in discussion with right now. That's a huge opportunity for producers if you have an existing relationship with one of those employers. It's definitely an easy way to get in front of a lot of people at one point in time, but it's typically a large employer only. But we're taking a look at those on an ongoing basis, and if you guys have any opportunity that you'd like to pursue with us, I can definitely get you in contact with our product area for that.
Okay, thank you. That was a question that was brought up by Brian Hall, so we'll follow up with him after the webinar.
Okay, great. All right, back to the presentation here. I mentioned that the best time to purchase a MedSup is when your client is turning 65. They can apply through what's called an open enrollment period. So this, once again, is when they don't have to respond to the health underwriting questions. So it goes through underwriting very quick, especially if you're using our e-app. They're guaranteed to have that coverage. The rate that we charge is only specific to their location and their tobacco use once again. Okay, so again, this 6-month period begins on the first day of the month in which they turn 65, and then after they enroll in Medicare Part B. A lot of people are going to continue to work after they turn 65. So if they do, maybe they retire a year or two later, they're now 67. Well, once they retire and then they enroll in Part B for that, then they would have satisfied these two requirements, and then their open enrollment period is going to begin at that point. So again, if they retire after age 65, but they're still working through that point, at 67 they then retire, and at that point they enroll in Part B, then their open enrollment period is going to begin. And I covered that last bullet right there. We also have what's considered a guaranteed issue period, and a lot of people are confused by this, and for good reason. The impact that it has, the effect it has on how a person can apply is going to be the same. So whether they're applying through an open enrollment period or if they're applying through a guaranteed issue period, the impact that it has on them is the same. They skip out on the health underwriting portion of the application. But what allows them to be considered in one of those two periods is very different. So once again, with an open enrollment period, it's either when your client turns 65 and they've retired, so they've enrolled in Part B, or if it's a later date, they're past their 65th birthday, but they've recently enrolled in Part B, they have that 6-month window to apply. That's an open enrollment period. A guaranteed issue period is going to pop up when a specific circumstance happens. Usually it's when your client is negatively impacted by their health care coverage and it's not their decision that was made. So for example, going back to a retiree plan, maybe they had retired, they're on their group health care plan still. That specific employer is going to offer coverage to not only current employees but retired employees as well. Well, we're seeing a lot of people, a lot of companies I should say, they're starting to dial those benefits back, and they don't want to continue to honor that coverage to their retiree, to their retired employees. So at that point, that's not really their decision. They're without health care coverage. What are some options available to them? Well, you can talk to them about a Medicare supplement, and because of that specific scenario, that would qualify them to apply for a MedSup through a guaranteed issue period, and again, they don't have to respond to the health underwriting questions. So that's a great opportunity for you as well. They definitely don't pop up as much as open enrollment period opportunities do, but they do exist, and if you do know about them, make sure you're aware of the rules. I will say that we do have applications. This should come as no surprise, but we do have applications that are submitted to us thinking that they qualified for GI and they did not. So I would check your specific state rules, and Medicare.gov is a great resource for that.
Jason, sorry, another interruption here. Got another question posed, which I think is important. On Medicare, accepting Medicare, with the doctor's office, accepting Medicare versus being willing to bill Medicare. And this comes up in our discussions all the time. If you're going to a physician who is not accepting Medicare, but at least willing to bill Medicare, that means that he or she can turn around and bill you, I think it's 20% above the Medicare allowed amount. That's called the Part B excess. And both the Plan G and the Plan F with Mutual of Omaha would pick up that excess. So the critical question that your clients need to be asking their doctors is if they, are willing to, if they accept Medicare, and if they don't accept Medicare, are they willing to bill Medicare? And if they're just even willing to bill Medicare, then you're perfectly fine knowing that the Medicare supplement is going to pick up any other charges that may come out of that office visit. So I just wanted to point that out. That question was posed to me online here.
Yeah, that's a great point and great explanation there, Dave. But you're right. The excess charges, that's a good point to make sure that all of our clients are understanding, because it is different when you're looking at plan to plan. Okay, going back to the PowerPoint here, a little bit more on comparing carriers. I believe I've covered a lot of this already, but this is just a good segue into the next point that I want to make, which is our company brand. All carriers, they may offer different plans in each state in which they do business, but if they offer the same plans, what's really different from Mutual of Omaha to United Healthcare? Well, those are going to be a few of the bullets that we see right here. So premiums, obviously that's at the forefront of our client's mind with a transactional product like this. Much like your car insurance, you just want to see where you can get the best rate, assuming that the coverage is the same. So that is going to be one thing that's going to differentiate one carrier to the next, the plans offered. And then customer and producer service, we have a pretty strong customer and producer support line. We're actually really proud about that. That's all in our home office in Omaha. We haven't outsourced that overseas or anything like that. So you are speaking to a mutual employee when you call up, and so is your policyholder, and we really pride ourselves on that, like I said. The brand, obviously, if you want to supply some financial information to your prospect or client on the company in which they're receiving their policy from, as far as the claims performance, how we've paid out claims over all of the previous decades. Again, going back to 1966, we can provide that to you. A lot of clients are interested in that, and we definitely don't blame them. It's really important to know that their claim will be paid when they need it to be. And then value-added benefits, discounts. We'll get into the household discount. I don't have a slide dedicated to it, so I'll just talk about this real quick right here. The one value-added benefit that we have currently is the iMed program. That's going to cover vision costs associated with health, eye checkups, lenses, contacts, things like that. That's not provided through a med sup, but to be able to offer a value-added program in which they can receive a discount on those services, a lot of people are looking for that. That may be enough to push them in one direction or another. So make sure they're aware of that. Because it is a value-added program, we definitely ask that it's not a part of the initial sales process. It's really just something that they're benefiting from once that policy is issued and they're a policy holder. Those value-added programs can be dropped at any point in time. It's not guaranteed renewable like the policy is, so just be aware of that. But definitely talk about it once that client is on the books with you, with our carrier or with another, of course, because there's lots out there. So a little bit about our company. Here's a pretty nice shot of our home office in Omaha. You can see what little downtown skyline we have in the background. Our company was founded in 1909. We are a mutual company. We're owned by our policyholders. We don't have stockholders. We don't have anybody that we need to report our numbers to. The policyholders are going to benefit for the continued success of our company. So I think that's really great, and we need to make sure that we're promoting that out there. We're a full-service, multi-line provider of insurance and financial services products. So while Medicare Supplement is a very important product line for us, we offer fully underwritten life insurance. I talked about long-term care. We have a very strong annuity portfolio. So once again, as you talk to your clients, make sure you're talking about all of the different needs that they have and position specific products that are going to be viable solutions for them. Obviously, as a broker, that may be with another carrier, which is completely fine, but just want to make sure that our clients are covered for and you're adding value to that relationship. A little bit on our financial strength. Here's the top 3 rating companies that we always like to talk about. You can see that we're A-rated with all of them. Very, very stable company, and we've been in the business for a very long time. From a brand perspective, I think a lot of people are familiar with Wild Kingdom, especially if you grew up in the 60s and the 70s, watching it on Sunday evening with your family. A little bit before my time, unfortunately, but we're continuing that success today, I think, with a lot of other promotional opportunities. Occasionally you'll see aha moments on TV during sporting events. We have endorsements with several golfers on the PGA Tour. The swim trials were actually in Omaha the past several Olympics, so we're really excited about that. We sponsor the USA swim team, and then Andretti Autosport, and some signage at some different events. So, with the NCAA tournament in town, sometimes you'll see some of that signage during the event as well. So, very strong company from a financial standpoint as well as from a brand standpoint. So why Mutual of Omaha for Medicare supplement insurance? I talked about this already. We've been in the business since the beginning, 1966. We do offer a product in all 49 states, I should say. There's not a product offer in Massachusetts. So in all other states, we do offer a Medicare supplement policy. The plans that we offer is not the same across the board. I'll actually show you a slide on that, and we can get that information into your hands. But we do offer at least Plan A and whatever else that may come along with that in all states. We're the second largest Medicare supplement policy holder, and we're actually the largest agent-sold Medicare supplement carrier. We're very proud about that as well. Since 1966, we've paid $12.5 billion in MedSup claims, so very excited about that. And then just a couple years ago, 2013, we're going to have to update this slide with last year, but we exceeded $2.2 billion in earned MedSup premium. So very strong product line for our company, and we've had a lot of success for it. Here's a little bit more on the plans that we offer. So once again, we offer at least Plan A in all 49 states, but it's definitely not just Plan A. Specific to what state you're licensed and doing business in, you can see the list here. All of our Medicare supplement policies are written on a host of different underwriting companies. You can see those listed at the bottom. Depending on how large your monitor is, that might be difficult to see, but we do that on Mutual of Omaha, United World, United of Omaha, and Omaha Insurance Company, which is our newest. And you can see that in those color-coded states in that map right there. I will say that as far as a competitive plan in those states, we typically try and like to roll a new one out in every 3 to 5 years or so. Sometimes it's on the same paper, sometimes it's on new. Again, that Omaha Insurance Company, that's the newest. That came out just a couple years ago, and we're having a lot of success with the competitiveness of that. You can see blue there, Kansas. I'm not sure if anyone's writing any business in Kansas. That's United World. That's the only one. That's one of the oldest products we have. It's not super competitive right now, but we're actually looking to release a new one in that state by the end of this year, and I think that filing is actually happening in a couple weeks. So just some current events info for you right now. I want to show you just a few maps before we move on, but just as far as our competitive position, the deepest blue is the best. So if you're, we probably have a lot of folks in California on the call, so we do have a lot of success in California. Generally in rural areas, in urban areas, we're not as competitive as we are in the rural areas. So keep that in mind. This is a look at age 67 for a female with a Plan G non-tobacco with the household discount applied. And we'll just burn through these pretty quickly in light of time. And we can get these maps out to you if you want as well. I'll send those to Dave this afternoon. But just taking a look at this, we'll talk about the competitive positioning of Plan G over a Plan F, but that's really our wheelhouse. You can see as we go forward here, still talking about Plan G over Plan F. There's a lot more blue on those maps. That's where we're most competitive. There is an annual rate adjustment that happens every year in all states in which we have a product. And just to kind of paint with a broad brush, so to speak, just average out those rate adjustments, and they're actually very, very low. 4% is what we're trending at for this year. That's with both ones that have already happened and projected rate adjustments later on in the year. And that does not include Plan N. We had a pretty pretty bad luck with Plan N a few years ago, so we're going to omit that. That is not offered any longer. Plan G review. So I talked about this quite a bit already. Why is Plan G a good conversation to have with your clients that are shopping for a med sup? Well, side by side, Plan G is exactly the same as the Plan F, except Plan F covers the Part B deductible. So while initially your client may think, well, Plan F has more coverage, that's the plan I want, it's not quite that simple, although it still is pretty easy. Okay, the Part B deductible is only $147, and regardless of how many times your client is going to see the doctor, they only have to pay that once a year. It's $147. If you can market a Plan G offered through Mutual of Omaha and their savings over a Plan F is greater than $147, then it's in your client's best interest to talk about the Plan G to them. Okay, if we zoom in, this is that from this flyer right here, this is that same information. We just blew it up so we could read it. If we take a look at an example, Plan F is the annual premium is $1,439. Again, it does have more coverage in it. It covers that Part B deductible, but the Plan G I can get for them is only $1,122. Well, if we add that Part B deductible to that, which again is only $147, that's an annual cost to them of $1,269. That's an annual savings of $170 for them, which is nothing to be too upset about, I don't think. So if we're talking to clients, that Plan G is especially competitive, especially in relation to that Plan F. Just crunch those easy numbers for them. They can really see that the Plan G is definitely the way to go, and that's where we're most competitive. Switching gears real quick and talking about the household discount. So right now, in the majority of states, we offer a 7% discount. And to qualify for this, we have a two policyholder definition. What that means is your client can apply and receive the discount if they live in the same house as a spouse or another individual. They don't have to be married. That is also a Mutual of Omaha Medicare supplement policyholder. Okay, that's the 7% discount. And right now we have about 50% of applicants that apply receive this discount. So it's pretty good, but we took a look at that and we're wondering, how can we get that better? We want to make this more attractive to all of our producers, clients out there. What can we do to increase the usage of that discount to entice more people to bring their business to us? So this year we're rolling out our 12% household discount, and this does not have a two policyholder definition to it. This has a cohabitation rule. So now if you're talking to that same client but they couldn't receive the discount because maybe their wife is a few years younger than them, she's still working, obviously she doesn't have a med sup yet, she's not able to have a med sup yet, well, the husband in that example, they would have to apply for the policy and they would get the single rate on that. Well, now we have a cohabitation rule, so they don't have to be living with someone that also owns a med sup policy through Mutual of Omaha. They just have to be living with someone, if they're not married, at least for the previous 12 months, and someone that's at least 60 years old or older. If they are married to the person that they live with, then those two rules get thrown out the window. So, they could have gotten married 6 months ago, as long as they're married today, and they could be 45 years old, as long as they're living with someone and they're married. Again, we're going to throw those two rules out the window, and that person can apply and receive the 12% household discount. Okay? We took a look at the statistics on this, and we're really shooting for a 75% utilization ratio. I think we're trending about 77, 78%. So it's definitely doing what we wanted it to. More people are getting that discount, and we're having a lot of success with that. So you can see here's the list of the states that is currently approved. If you're not in one of those states, we do have a rollout schedule for this year, 2015, to get that in the majority of states. That, at this point, is up to states' approval, so I don't have any newer information than that for you right now, but it is coming down the pipe, so be excited about it. Here's a look at those states that we're planning to roll it out in 2015, and then anything else is going to be next year in 2016. Now I want to take a look at a few programs that we offer. So this is above and beyond the product that you're going to offer to your clients. These are really designed around the fact that we want to increase the business that you bring to us, and we want to also increase the quality of business that you bring to us. If all we got was open enrollment or GI business with people that may not qualify by going through a fully underwritten app, well, I guess fully underwritten isn't the best word to say, but an underwritten app, obviously that claims performance is probably going to be less than stellar. That's going to impact the rate adjustments that we have every year. That's not going to give us or you the competitive product you need to sell. So the first one I want to talk about is the mix of business enhanced renewal. This is incenting you to place more underwritten business with us. Okay, so what this is going to do, it's going to pay you additional renewal compensation if the underwritten mix is at least 40%. I can't zoom in on there. I should have gotten a better shot of that flyer. But if your mix of business in one quarter, let's just take January, February, and March of this year, 2015 as an example. If you did, say, 10 med sups and 4 of them, so that's 40% there, are underwritten, and that business is still on the books on the 12th business day in April, then we're going to pay you 2% bonus on top of the renewal compensation that you would have received in the traditional manner. And that's paid starting in year 2, and it goes through year 6. If your underwritten mix is at least 50%, then we're going to double that, and we're going to pay you 4%. So what does this really look like? This is a very rough example, but just to make it a little bit more clear, we do get a few questions on how this actually works. Let's say last year you did $150,000 AMBP with Mutual of Omaha, and your underwritten mix was 50%. Well, since you qualified for that higher tier, we're going to pay you that 4% bonus comp. And again, it's only in years 2 through 6, so that first year we're not going to pay anything. And then also you can see down here in the gray, we just assumed a 10% drop off in in-force business just because that's kind of the fact of the matter in our business. So we took 10% out of that $150,000 figure. Starting in year 2, 4% of that figure is going to be $4,874. And then again, 10% is going to drop off. That's why this number is continuing to decrease. That may not happen, quite honestly, but if it does, this is what that would look like. Then we're going to pay you 4% for that, and then successively through years 2, 3, 4, 5, and 6. Okay, so this is almost $20,000 that you would have not received if this program didn't exist. Again, this is incenting you to place more underwritten mix with us. As long as it's 40%, you will qualify for something. That's 2%, and then with a higher, which is 50%, it's bumped up to 4%. So pamphlets, postcards. If you have a marketing campaign that you want to do later on this year, maybe right before open enrollment period starts, you can use marketing credits to purchase postcards through our fulfillment phone numbers. So call into that, order some postcards. If you have a marketing credits balance with us, you can use that for those postcards. A few other things, if you want to buy leads that are available through our distribution, you can do that. They're not available in all zip codes, but if you are interested in doing that, you can definitely do that with us, and you can use the marketing credits to offset the cost of what those would be. You can also use it for items in our company collection. The Wild Kingdom calendars are always a hot seller. Polos, golf balls, anything along those lines, you can use the marketing credits for that. So how do you earn marketing credits? If you if you can sell and 5 of those MedSup policies are issued in 1 month, that's the minimum, so you have to have at least 5. If you do that, you're going to get marketing credits that are equal to 0.5% of the ANBP on those policies, and that's for paper applications. We're really excited about the e-app. We think we have a really good one. If you're doing the e-app, we're going to double that, and we're going to pay you 1%. Okay, so it doesn't sound like a whole lot, but if you're doing 5 or 10, that could easily be a couple $100 every month that you're placing that business with us. So that's a really great program. We're just trying to help you reinvest that money back into your business, be more successful, really move the needle the next year. This is a great way that you can do that. And just so you know, maybe I don't have another slide. Yeah, that's going on to the next thing. So real quick, I'll just say that 1 marketing credit is equal to $1. So if you have 200 marketing credits, that's $200 you can use on marketing-related activities. And then real quick here on some of the incentive trips that we have. We're really excited to take our agents to Rome next year. So, typically we'll do 1 national trip. The one this year was in Hawaii, which I heard was really great. And then every other year we'll pick an international destination. Next year we're going to Rome, Italy, which is really exciting. That's going to be April 8th through the 13th of 2016. And how you can earn your way on MedSup business and also the Simplified Life products. If you do MedSup, you need 200,000 production credits that are required to qualify for the trip. And if we take a look, this is that same flyer just zoomed in a little bit. 1 MedSup production credit is equal to $1 of ANBP. Okay, so 200,000 on the MedSup side. If you qualify through Simplified Issue, you need 70,000 Simplified Issue production credits, and you can see the list of products that qualify under that term, Simplified Issue. We have the Express products, Living Promise, which is our final expense product, the Children's Whole Life, and the Whole Life Express, as well as a Guaranteed Advantage. So really excited about that. The production credits are earned in the calendar year, so 2015 you have up until December 31st to earn that, and that's next year. The last thing that I have, I know we're getting short on time, I just want to talk about our e-apps really quick. This is really a topic that's best suited for a standalone webinar, so maybe we can do another one here shortly, just demonstrating how it looks and how it kind of flows. But of course, we love e-app business from a carrier standpoint. It definitely keeps our costs down. In a lot of cases, especially if it's an open enrollment or a guaranteed issue policy, that's going to auto issue, so no one has to take a look at it. We don't have to spend costs on distributing the applications and things like that. So from a carrier standpoint, obviously it's good, but it's also good for you. Okay, when you think about an e-app, you can't submit the application unless it's filled out correctly or if it's incomplete. So, that is going to positively impact the time service. You're going to get paid quicker. Your client is going to get the coverage faster when they need it the most. So it's really a win-win across the board. That's why we have that marketing credits program in place. We're further incenting you for that by doubling the marketing credits you could receive if it's e-app business. So, we're really excited about it. Hopefully you are too. And if you haven't tried it out before, that is access through Sales Professional Access. That's our agent intranet site, so log on to that. If you go to the MedSup product tab, there's a link that says MedSup eApp. That'll get you started. There's a sandbox that you can play around with, so if you haven't done it before, you're not sure how to do it, and you don't want to fumble your way through when you're sitting down with a client, you lose credibility that way, of course. You can log into our sandbox as a test environment. Feel free to do a few dummy apps. None of those applications, I should say, are going to actually enter into our underwriting process. So you can definitely, just kind of learn your way through it through the sandbox, and then once you're confident in how the process works, then you can access the real eApp, and that's available through SPA as well. And then finally, I just wanted to mention our consumer e-app. So where I said e-app right here, that's our producer e-app. So that's where you would, again, you log into SPA, you're sitting down face-to-face or maybe over the phone with a client, you're filling out the application for them, okay? This is very, very new. This is just come out this year, and this is an e-application that your consumer, your client, can fill out on their own. I will be honest, a lot of people have not warmed up to this idea yet. They think we're taking an agent out of the sales process, but we think this is going to be great over the long term. Okay, we really need to help everyone understand that, you know, there are going to be clients that always want to work with an agent. They have specific questions that they want to ask to their agent. They don't want to fill out the application on their own. Those people are always going to be available to you. This is not ruining those sales opportunities. But in fact, you're now able to work with a new group of clients that maybe you didn't have access to before. Maybe someone has a sour taste in their mouth. They don't want to work with an agent. Maybe they want to do some self-education on their own on a website. Maybe they want to ask someone that they feel is not partial to the sales process. Well, they can do that, and we are giving everyone that has a MedSup attachment with Mutual of Omaha, so you've submitted business to us before, you have access to a personalized internet link or a URL, okay? If you are doing a postcard marketing campaign, like I mentioned on the marketing credits slide, if you're doing a marketing campaign later on this year, you can go into our fulfillment line. You can order a postcard, have your personalized URL printed on that postcard, send it to a list of leads that you purchased, and if me, as one of those leads, receives your postcard, I am invited to go onto mutualofomaha.com. I can do that self-education. I don't have to talk to you on the phone, but by using the link that's printed on that postcard, that is attaching you to that application. So if you never have a phone conversation with that individual, you never have an appointment with that person, as long as they're using that link, that ties your name to that policy, and if it's issued, you're going to get full credit for that. It's not reduced comp. It pays the full compensation that you would have received had you done it the traditional way. And so what this is doing, it's increasing your footprint, okay, those clients that you have access to, and it's really further incenting you, giving you compensation for work that really isn't adding anything to your workday. You're still talking on the phone to the same individuals. You're still working with the same individuals. You're not adding anything to your workload. But if someone were to apply for and have their policy issued through the consumer e-app, you're going to get that compensation, like I said, and it's just a way to further move the needle. So I would definitely encourage you to check that out as well. If you go to our Sales Professional Access website, and if you navigate your way to the e-app page, once you get to the producer dashboard, which is really a home page that lists all of the e-apps that you've submitted, and you can check the status on those, there's a link in the top right-hand corner that lists your personalized URLs. Write those down. Definitely promote those as much as you can. You can feel free to put them on your website. If you want to order the postcard, we've created those for you to use as well. I've even seen some producers put them in like an email signature line. That's a completely free thing to do. If you do a lot of individual email correspondence, that's a great way to get that in front of your clients. Just another way to do business with you and with our company, and it's going to hopefully move the needle for you down the road. So that is all that I have for you today. I just want to open it up to see if there's any other questions.
Yeah, hang on. Thanks, Jason. That was just totally awesome. I am slowly going through and unmuting people, at least those who have dialed in the correct way. So as I get, if you can start talking whenever you want to start talking, folks, or ask any questions. I did have one question come up that I wanted to bring up here. We've heard a couple of times rumblings on the street that, Jason, that Plan F is going away, or potentially going away. Have you heard any rumblings to that effect at all? I mean, that the CMS might just completely pull the Plan F completely off the table.
Yeah, we've heard that as well. That's really a product of the legislation that was passed just, I think it was last month, and those changes are going to go into effect in 2020. What those changes are, it's the first dollar coverage, which is going to include the coverage for the Part B deductible, which of course is what Plan F covers. And I think that's going to position Mutual of Omaha to the marketplace very strongly. We're kind of a leg up on the competition, so to speak, because our niche, once again, is in Plan G. That is going to continue to be offered, but, of course, we don't really know what exactly is going to happen at this point, but it's something that we definitely have our ears pricked back for, and we believe that we're positioned very well for that.
Okay. Great, thank you. Any other questions out there of Jason or myself?
I have a question.
Fire away.
In Washington State, we have guaranteed issue for people who already have Medicare supplements. And with some carriers, unfortunately some people have some claims soon after switching, and some carriers can handle that seamlessly. There's at least one carrier that just has horrendous problems with that. And the client has to submit their Medicare report. How does Mutual of Omaha handle that situation?
That's a good question. I think what I'm going to have to do is check with our claims department. What info are you actually looking for? Is it like time service on claims paid? I'm not sure how to respond to that at this point, but I can definitely dive into it for you and get back with you.
Okay. I'll get back to you some other time.
Sure. David, we'll follow up with you on that question as well, but I've never heard anybody complain about anything that Mutual has to do when it comes to Medicare supplements. I mean, there are still people in Washington State that are still on the old standardized plans with Mutual of Omaha, and they just won't move because they don't want to fix what's not broken. I mean, Mutual has a reputation of paying claims expeditiously especially to doctors, and when you have a happy doctor, you've got a happy patient. So I've never heard any complaints about Mutual being slow to pay or being a pain to pay ever when it comes to med subs.
Okay.
Is there a specific client that maybe has had a less than positive experience with that?
No, not with Mutual of Omaha.
Okay. Well, that's good to hear. But just as far as responding to your question, I'll get some information. I'll relay that on to Dave, and then he can pass that out.
Okay, thank you.
Any other questions? Well, we got a little bit of feedback here. Somebody's got me on a speakerphone. If there are no additional questions, okay, once again, Jason, awesome job. Thank you very much. We'll get a copy of this PowerPoint over to us, and we'll get that out to everybody who is on the call today and keep it here in our library as well. As I mentioned, we did record this session. It will be available for your review up on the www.yaim.com website by sometime later on this afternoon. And thanks again for joining us. Have a great day, everybody. Take care.
All right. Thank you, everyone.